most hedge fund managers make money?
Well, they certainly make money on the asset management fees. So making money, it's an interesting question. You have to define it in some sort of sense. The answer is yes, they make money. Otherwise, they wouldn't be running it. They couldn't pay their bills, etc. Do they make outsized returns? Well, for that to happen, they need to get past that magical barrier of 100 million. So once you do that and you have performance, then you should be able to expect to get $2 to $4 million of income per year. And so the answer to that is yes. I said if you get past that particular hurdle. So what a lot of people don't understand, a hedge fund is like a business. It is a business. It's like a shoe shop. So a shoe shop is responsible for having a storefront and advertising and customer care and a whole bunch of other stuff. That probably takes up 80% of the time. And then maybe 20% or 10% of the time is in terms of the love of shoes, constructing those shoes with leather, measuring feet, and doing what you usually imagine an old-fashioned shoe shop does. And the same is with a hedge fund. 90% of the time is administration, legal fees, audit, marketing, due diligence, and maybe 10-20% of the time, if literally you're a 2 or 3 man show, is spent with developing systems what you're passionate about. And so ultimately it is a business. And as with any business, if you put your mind to it, you can make it successful.
What would you say is the ratio of winning hedge funds to losing ones?
Well, there's an interesting statistic, and I think it's very similar to the one in terms of, new businesses. So many new businesses after 3 years fail, and it's the same with hedge funds. Something like 50-60% of hedge funds close down or shut shop after the first 3 years. And that usually tends to be in part because they blew up, meaning their losses were too big for investors to stomach, and they shut shop. That's one factor. The other factor is they never managed to get past a certain hurdle where the fees justified the amount of stress. So it's interesting. When you manage so there are 2 types of personalities here. If you manage somebody else's money, you can either take the attitude, I have fiduciary responsibility to make sure that the money increases, because you actually empathize. This person had to work real hard to get that money together and then give it to me, so I have some responsibility. Or you can have the attitude, hey, great, this is money to gamble with, see what happens. So if you take the former attitude and you feel fiduciary empathy for that person, responsibility, the stress just goes sky high. And so ultimately, it's not just about did you cross the hurdle and you have the business and you have the marketing. You also have to deliver the goods, and the markets are random. And actually, unlike most other businesses, trading, you actually spent the majority of your time trading in a state of regret. And that's a kind of stress that most people can't cope with. It means that the majority of the time you go to bed with losses and you just feel this gut-wrenching feeling, are you going to make it back? Is it going to go in your favor? What's going to happen? And it's actually very easy to see. If you look at the S&P over the last 200 years, or 180 years, and there's a very interesting study done by a guy called Robert Frey, you can ask yourself, how many months, or what fraction of months, do I spend in a state of loss, meaning that I'm below the previous high? So as an example, in 2008, the S&P crashed by 50%, so you had the previous high in 2008, and you're below that high. So how many times does that happen? Turns out it happens something like 70% of the months. So 70% of the time you're going to bed with a loss. And that's not a very pleasant feeling to live with. And I think that's another big factor why people in the hedge fund industry fail, because they just can't be bothered with that. And it's very difficult when investors call you up and say, am I making money? And you have to say to them, well, actually, we're in a drawdown, and they get pissed off. A classic example of that is, when you talk to investors, the first thing you have to ask them is, how much money are you willing to lose? Because you're giving me your money and you don't want it to vaporize. And so when you engage them, and having had hundreds, if not thousands of such conversations, you tend to find out that the majority of them are willing to lose up to 10% of what they have. So if you give me $1,000, you're probably willing to lose 100. Or at least that's what you verbalize. Yeah. So now comes the crunch point. Let's say you've lost not 100 but $50, you're going to panic. Now, that panic, unfortunately, affects me as well, because I have to provide a service. And then that complicates the entire situation over again. So running a hedge fund with clients is actually a very tricky business. It involves human emotion, being able to negotiate the markets, and being able to have a structure that makes everybody happy. But as we just said, living in a constant state of regret isn't going to make people happy. So there's just, it's like adding petrol to the fire.
Are there any hedge funds that consistently make money year in, year out?
Yes, there are, and several come to mind. One is, you can't invest it anymore, but everybody knows about it. It's the Medallion Fund run by Renaissance Technologies, who are considered to probably be the best hedge fund out there. If you certainly look at performance numbers that you can kind of extract out of the internet, they have had more or less an exponential rise in capital, and it certainly has made Jim Simons, who's the owner or the founder of Renaissance Technologies, one of the richest men in the world. Other funds are Tewksbury Capital, I think it's called Stevens Capital, was set up by Monroe Trout, who is mentioned in the Market Wizard series by Jack Schwager. And they've been running, I think, since 1993, more or less with positive years. So these are truly phenomenal people. And as you do research about them, and I urge people to do that, you'll find sort of hints and ideas as to what you can implement in your own trading. So the answer is definitely yes. But I think the problem here, and the reason people tend to ask that question, is there a fund that makes money year in, year out, is because people suffer from this desire of certainty and security, which is one of the reasons I think that, so a lot of people will probably Google, how do I make money, or how do I make money online? And so you'll find that there's this big buzz around entrepreneurship over the last couple of years that's been built up. And then you ask yourself, well, so if this stuff is laid out for you and so easy to learn, why don't a lot of people do it? Well, because it requires that hop off a cliff. And once you hop off a cliff, you have to build the plane on the way down. And there is no security. And you'll find, I think, that probably 90% of people just don't have that willingness to live with uncertainty. And that's why the question. And I will therefore answer, yes, there are such funds. And they're tremendous people and wonderful people who run these, very intelligent. But let's have a look at Warren Buffett, who is considered, of course, the greatest investor. And how do you track his performance? So I think Buffett's a very interesting story because you can track his performance via the Berkshire Hathaway stock. And so if you actually pull up Berkshire Hathaway stock for the last 20 years, you'll find that Buffett has experienced 50% drawdowns, which lasted several years, several times in a row. He always made it back and then doubled his money on top. But there were periods where he was looking at a big loss. And the people who bought into Berkshire and bought that stock for several $100,000 also were looking at a big loss. And yet it continued to make money. So the art of trading is not about looking for something that's 100% certain, because nothing in life is. And the markets aren't. And if you want to trade the markets, you're deluding yourself if you believe that. It's about understanding what in the long term will create wealth for me. What will pay off? It's like planting a seed and then constantly nurturing it, and it'll grow. And if you plant several seeds, some will be eaten by animals, the other one will die of fungus, and one of them will grow into a big tree. You'll never know which one it is. So that's the whole point about diversifying, about constantly being engaged and having faith that it will work out. And I think that's a very big important thing. You have to have faith. It's like in the morning you wake up, you cross the street, you don't know if you're going to be knocked over by a car. You just have the faith you won't, and that's why you continue on with your day and you don't stay in bed being afraid. And it's the same with trading. Yes, you can make money if you stick to the rules, but you're not going to make money all the time. You just have to live with it. And as we said, in trading, you spend most of your time in a state of loss.